Okay, we're going to go over a quick rundown of last week. Um, what we went over last week, one of them being the accounting equation, assets equals liabilities plus owner's equity. What an accounts receivable is, which is money being received by us for goods or services sold or provided, as well as accounts payable, which is money being paid out to us from us for goods and services that we received. Um, in order to categorize all of your eggs into their proper basket, we have to determine what's an asset, what's a liabilities, and what is an owner's equity. Part of doing that is doing a financial statement, and financial statements comprise of income statements, owner's equity statement, as well as a balance sheet. So there's also a fourth one, which is the cash flow statement, and we actually will not be going over that in this course. So the financial statements are done in a very specific order. The very first thing that they do is an income statement. And we do that because we're going to take part of that information and go and complete the owner's equity, statement of owner's equity, and then that information goes into the balance statement. So there's a very precise manner. So an income statement is a statement of formal report of the business's operations covering a specific period of time. Sorry about that. That's driving me nuts. Probably because I can see it, so it's driving me nuts. It's also called a P&L, or profit and loss statement. Now, each one of these statements starts with a 3-line header: the who, the what, and the when. Who is the business name? What is the financial report that you are processing or looking at? And when is the period of time we're talking about? Is it monthly? Is it quarterly? Is it yearly? So month ending December 31st, 2013. So you're going to list on the income statement what your revenue is. And if you have different types of revenue, you need to list out each type of revenue. Then you're going to list your expenses. And of course, your expenses, you're going to have salary expense, utility expense. Don't just lump it all together and say, here's all my expenses. What are your specific expenses? And depending on whether your income is greater than your expenses, gives us whether or not you have a net income, a net loss, or if you break even. We're then going to take that information and prepare a statement of owner's equity. So the statement of owner's equity, you always start with the ending balance from the previous month. So if we're finishing December, we're going to look at the ending balance as of November 30th. So what did we start December 1st with? If that is a 0, you list a 0. If you started out with $100,000, you list $100,000. You're then going to include any net income less withdrawals for December. So if your net income was $38,000, but the owner took a $10,000 draw, then we're looking at $28,000. You're also going to add any increases to capital. Was there any investments made? So when I said that revenue and expenses do not directly affect the owner's equity, that is true. It doesn't affect the capital accounts. A lot of individuals have a tendency to go, well, they use cash, so that's coming out of the capital. It's not. Capital accounts are only touched when is it true influx or investment from the owner or withdrawal from the owner. Nothing in between. Oh, sorry about that. So that gives us what our ending owner's equity balance is. Then we're going to do the balance sheet. So we're going to take information from the first one to compile the second one, information from the second one to compile the third one. So the balance sheet, we're going to look at our assets, our liabilities, and our owner's equity. So you need to list out your assets: cash, accounts receivables, supplies, office supplies. If it is a liability account, then you need to list that. Prepaid rent, equipment, what are my total assets? And the next side, you're then going to list your liabilities. You really shouldn't have that many liabilities. It should either be accounts payables and notes payable, and that's really it. And then owner's equity. What was my final balance for owner's equity? And therefore, when I add all that up, what is my total liability and owner's equity? So with those three cash flow statements, not cash flow statements, I apologize, those three financial statements, we're able to determine what is our financial bearing for this time. And that's going to help your bank. That's going to help the IRS. That's going to help your CPA. You're going to know where you are at all points. Now keep in mind, revenue is an inflow of money or other assets that result from sales of goods or services. An expense is an outflow of cash or other assets. Now, the income statement is a formal report of business operations covering a specific period. Like I said, it's called the profit and loss. So all of your transactions are going to be dealing with that month that you are in. Of course, we looked at the first week, what are liabilities, what are owner's equity, what are assets. Keep in mind, assets is property owned by the business, and liabilities are debts or obligations of the business. And of course, owner's equity is, especially the term used for a sole proprietorship, which we are assuming, is the financial interest of the owner for the business. It's also called a net worth. So when you're analyzing your business transactions leading up to preparing these, keep in mind that you need to describe the financial event, which means identify the property, identify who owns the property, and determine the amount of increase or decrease. And make sure your equation is in balance. So property is the asset, and financial interest is that an asset owned by the creditor? Is that asset owned by me, the owner? That's going to determine where it's going to go in your general ledger and your account analysis. If you have a capital investment of $60,000 through cash, you're obviously going to debit cash or increase cash by $60,000. That means that you're going to credit owner's capital or increase owner's capital by $60,000. Because I have a debit and a credit, I'm even. I just zeroed everything out. And that's where you're going to have double postings for everything. Everything has to equal. This is just a short summary of what we're looking at for week 1. There will be another video later in the week. Make sure that you're looking at your PowerPoints, that you're looking at all available resources listed under My Course Connection to help you assimilate these financial statements. Accounting, it is vital that you read your book. And there are examples of how you're going to complete these financial statements in those books. I recommend that you print out the sheets that you're going to be doing. Write it out in pencil. That way you can be looking at your book and trying to do the process and not trying to be flipping back and forth. It does make things a little bit easier, and sometimes when you can see it in front of you versus on a screen, it just kind of all clicks. The big picture comes together. Give me a call if you need. Look forward to seeing you in a little bit later. Thanks so much. Bye.